Good afternoon and welcome to the Tech Report. The market is still digesting Apple's earnings from yesterday afternoon. The quarter wasn't necessarily bad, but it was lower than a year ago. And to be fair, the company did announce that it was changing its revenue recognition policy and will defer more revenue on certain products going forward. Most sell-side analysts are positive on the company following the earnings announcement. It's been a long time since Apple went public and the stock has performed brilliantly since those days, but will that be the same case for Twitter? The social media site is planning to go public next week at the New York Stock Exchange in an almost $1.3 billion offering, and the planned price for the shares is in the range of $17 to $20. Joining me now is Francis Gaskins, Director of Research at Equities.com. Francis, you have a buy rating on Twitter. Why is that?
Well, because we're looking into the future, the compound growth rate, or the growth rate for next year versus this year is 54% estimated, 31% estimated beyond that. It's a higher growth rate than LinkedIn or Facebook. But what I really look at, I look at two things. Well, one is gross margin and the other is EBITDA when a company's losing money. And in the roadshow, they said that the EBITDA margin was 7% and their target is 35 to 40%. So if they had come anywhere near that, the company can really move into the profit area. In terms of gross margin, their gross margin is 63%, Facebook's is 73%, LinkedIn is about 87%. So their target there is high 70s for the gross margin. So if they can bump the gross margin and get their EBITDA up, and they can have a good increase in top line revenue, they're going to be break even. And in fact, the estimates for 2015 are revenue of $1.3 billion, up 31% from 2014. I think that's conservative. I think they'll blow it out of the water. And the estimated loss is only 1.7% of revenue. So that's almost a break even.
Well, let's talk about that revenue, because there are several revenue drivers that aren't given a lot of prominence in the SEC filing. Why is that? And will they ever amount to very much?
Well, I think they will. I think that Twitter want to be the end of Facebook. They want to really do well in the offering, and they don't want to have the drop from 44 to 18. And of course, Facebook is back now at 51. The three main drivers, and that's the display advertising. You see the promoted tweets and the promoted trends, but they've got 11 other revenue drivers. The three most important ones are television ad integration with the televisions. And you see that on American Idol, and so you think you can dance and that kind of thing. And then the other is international expansion, and because 77% of the users are not in the U.S. And then the other one is, and hold on for a second, please.
Well, they have the big data, and then they have Vine, their video offering. So, those are pretty important.
Right. The other one is they're putting up a self-service platform. So you don't have to go through ad agencies, and that'll really be helpful, I think, in the international expansion. And I think with Twitter, the general public doesn't really understand Twitter. They don't understand the revenue models, and for sure they don't understand the kind of these 8 new drivers that I mentioned. So what that does is that leaves some performance to come, a surprise. With Facebook, everybody knew Facebook. There was no real surprises. The question there was, how do they monitor their user base without growing it much? That's what they did. I think in Twitter's case, they're going to monetize their user base without growing it too much. So I really think the top line revenue estimates are conservative.
Do you have any concern over the glowing response that this company is getting? Our own Doug Cass, one of our contributors, went out and said while he has issues with maybe some of the numbers of the company, he thinks people should go out and buy this stock. He thinks that it will go up quite a bit. He's very bullish. Do you worry about that many people being so bullish about an IPO?
Well, I'm not sure. He's fairly sophisticated. I think when I talk to people that are not institutional, they say, well, they're going to stay away from from Twitter because it's losing money and they don't want another Facebook. And probably if you talk to the average taxi cab driver in New York, that they won't recommend Twitter, but they were recommending Facebook. So I think in terms of the knowledge of what Twitter is and how it works, it has a long way to go, which is good for a stock.
All right, great. Thank you so much, Francis. One company that is similar to Twitter and could be preparing itself to go public is Snapchat. Joining us now is our Brittany Umar to tell us more.
Photo sharing service Snapchat is reportedly in talks for another round of funding that values the company at up to $3.6 billion. It was just 4 months ago that the company announced a round of venture capital funding that valued it at $800 million. Now, the Wall Street Journal reports that Facebook offered $1 billion to acquire the company, which Snapchat CEO Evan Spiegel reportedly turned down. Snapchat, which has soared in popularity especially among teens, is primarily used for sharing photos that disappear in 10 seconds or less. The company claims 350 million messages are shared every day. But as Snapchat's popularity has increased, its revenues have not. The company has no revenue or ad strategy currently in place, although Spiegel said he hopes to generate revenue ahead of another funding round. While it remains to be seen whether Spiegel should have taken Mark Zuckerberg up on his reported $1 billion offer, it could be useful to remember Twitter, where early perceptions and valuations hardly compared to the upcoming IPO that values it at about $11 billion today. Back to you, Deb.
Thank you, Brittany. We'll keep our eye on Snapchat, see if it's going to be going public anytime soon, and of course give you all the details. I'm Deborah Borchardt, and this is The Street.